They understand that this is a battle. And I don't want to go as far as saying between good and evil, but you can use that if you want. It's a battle for high stakes. I'll put it to you that way. It's a high stakes battle, and really it is an indictment against the West and the Western system. And I think the people watching this understand.
Attention viewers, let's hear the leading voice from Miles Franklin, Andy Schectman. Watch for an authoritative discussion about gold and silver price fluctuations and the formidable drivers impacting their future. So, if you want to make profitable decisions, keep watching until the end of the video to understand what Andy wants to explain.
Yeah, I like your take on that, to be honest with you. And I think if you look at when markets start to move in one way or the other, typically they're preceded by great volatility. And look, this is not going to be an easy run, no question about it. Great volatility, to be for sure. And yeah, I remember Jim always saying that you'd see silver move in, not just in dollars, but maybe tens of dollars, and gold moving in hundreds of dollars. And yeah, we saw that. We saw just how fast it can move. But look, the banks, the central banks, the commercial banks, really, they're still in control of the price of gold and silver, and until they're not. And the West has a system that is slipping away from them, and they're going to cling to it to the best of their ability. And the canary in the mine shaft is accelerating gold and silver. It's not just a commodity. It's an indicator that the emperor wears no clothing. It's an indicator that the system, it really is filled with fragility and is over leveraged and undercapitalized, and all of these things. There's a magnifying glass that shines upon those things when the price of gold and silver takes off. So it's a lot more than just doing well on your investment or on your position of gold and silver. What it really is kind of, I think, the exclamation point behind everything that we've been talking about for a very long time. So yes, I think we'll see more of that as time goes on. And I think there'll be a Monday morning when we wake up and the commercial banks have given up trying to suppress the price. They've given up naked shorting, and they've suckered the managed money into going record short. And then it will just run. Now, we've been expecting that for a very long time. And, that should be the cover of the new abridged Little Boy Who Cries Wolf. It will just run. But look, the wolf comes at some point. So I think that that's something that we've just become accustomed to, and which makes it that much harder to hang on tight. But look, I mean, in 2023, the U.S. government took in $4.4 trillion in tax revenue, but their expenses are at $6.3 trillion. And I was reading something that says that next year it's supposed to be 6.8, and then 7.1, and then the next year up all the way up to 10 trillion by 2033. And so when you talk about the reasons to own gold, our tax revenues are decreasing as the economy is getting tougher, and our government is addicted to spending, and the dollar's in trouble. And I think that's exactly why they don't want to let the price of gold and silver take off, for people to realize that this is a game that will not end well for the West. And I expect to see much greater volatility. And on these pullbacks, look, do what the big money is doing. And the big money, the governments around the world, Turkey and China and Saudi Arabia and all of the central banks are massively accumulating gold and silver, not just gold, but they're also accumulating silver, and use this as an opportunity, I think, to do exactly what they're doing. It's a subsidy. And, we've talked a lot about Turkey buying a whole lot of gold, but they also just bought a whole bunch of silver, and, more so than they ever have. Their imports for 2023 are already at a new record of almost 32 million ounces. So these countries that are using the Western suppression to de-dollarize and to accumulate massive amounts of gold and silver, well, that's what we need to do. And whether it's massive or small bits, instead of getting dejected, which is easy to do after all of these years, stay with the plan, trust your gut. This will not end well mathematically. One last point, to hammer this home, and that is that when I look back at the things that we've talked about as a company, or you and I personally or professionally for a very long time, the majority of everything we ever talk about happens, usually much longer or later than we had anticipated, and usually for reasons that we didn't see coming. But when you're looking at things through a lens of economics and mathematics and a sprinkling of old school logic, they come true. You just have to hang on. And looking back over 34 years, sometimes hanging on means hanging on a lot longer than we would like. But this volatility that we're seeing, I think, is a precursor to some sort of a movement. And is it the ultimate movement, or is it a notch higher and then more volatility, then a notch higher and more volatility? I don't know, but I think the only way to really deal with it, if you believe the math, if you believe the economics, if you believe the logic, if you believe the central banks that have a script, have a playbook, then do what they do and use these pullbacks as a subsidy and as a way to increase your position in a world that's getting increasingly insane. I think they understand exactly what this is. And as we get closer to some sort of resolution with the markets and with the dollar and the political and the geopolitical and all of the things that are swirling faster and faster and faster, they understand that this is a battle. And I don't want to go as far as saying between good and evil, but you can use that if you want. It's a battle for high stakes. I'll put it to you that way. It's a high stakes battle. And really, it is an indictment against the West and the Western system. And I think the people watching this understand. And they know that the West still is powerful enough to do all they can to not allow things to take off in that manner. They would much rather see it slowly rise than to see it take off and shine a light upon everything that really is unfavorable in terms of the Western system. And so, no, I think it's surprising that I haven't gotten anything in the way of people saying, I give up, I throw up my hands. No, if anything, the pullback has increased our business. It was slower when the price was going up, over those 2 days. People were reluctant to jump on board. And I think there's something wise in that because, when you jump on board as the price is flying, that's FOMO. But when you take a step back and you buy on the dips, that's logic. And that's what we've seen a little bit of the last week or so. Do you remember? What happens in March is that short-term bank lending program that has roughly $120 billion owed to it, it sunsets in March. So is the Fed going to extend the program? Or are they going to say, no, you banks need to pay up? And there were banks on that list, Chris, that had borrowed as much as 130% of their equity at onerous rates, posting collateral. So what happens at the same time as M2 was falling off the cliff the most since the Great Depression, and the economy is slowing, that is going to start to put real strain on the businesses and the corporations that need that cash to operate, to do the things that maybe the last several years of low interest rates and easy money incentivize them to expand bigger than they otherwise would have. And to see the cash draining out of the system is probably a precursor to greater problems in the economy. And I think that when you look at what could happen in March, if I were a betting guy using Vegas as an analogy, since I was just there, I would say all the money would be on March and April to see some real problems as the banking crisis maybe takes it to a next level, as all of these banks have to pay back those loans that they borrowed from the Fed, which just hit an all-time high again. It's not getting any better for these banks. And this environment, especially of a falling M2, the falling money supply, tightening lending standards, credit issues, these are all, I think, bad omens to what we could expect to see in March and April. And I don't think the Fed wants to cut. Maybe they'll be forced to cut. But what does that really say to the rest of the world? The rest of the world, if they're wise, they'll say, well, shit, they've chosen inflation over austerity. They will never fix their balance sheet. It's kind of what's going on with the Bank of Japan, Oh, we're going to fix this. We're going to get tough. And well, they're not raising rates anymore. And the minute they do, it starts to break. Look what happened in the UK. As soon as they started to raise rates, the pension issues. We've crossed a line with this stupid monetary policy, G7 monetary policy of interest rate suppression and easy money, and the distortions that it's created. It makes it almost impossible to come back without really disrupting and or breaking the system.
A big round of applause for Andy Schectman from Miles Franklin. Let's remain optimistic about the future of gold and silver. Stay positive, stay informed, and keep supporting us by liking, subscribing, and sharing our channel. See you soon. And remember, in the world of precious metals, every shift brings new opportunities. Keep an eye out for the next chapter in this exciting journey.